Hey guys, how's it going? It is about 10:10 p.m. Pretty late. Obviously, I missed the afternoon session and as planned, and I wasn't able to record a video. So given the time that it is right now, given that I probably have 2 to 4 hours of work still ahead of me, I wanted to do this video now while I was still very alert, still have plenty of energy, rather than trying to do it after I finished all of my work and risk being tired, or trying to wake up tomorrow morning for the live session and risk being groggy and not being able to provide quality analysis, or maybe missing something just because I'm too tired. So we're going to do this video now. Unfortunately, that means we won't have all of the data available to us. We won't have that PPI report. We won't see the market reaction to it. We won't see the market reaction to the retail sales numbers, but I'll guide you and tell you what to watch out for depending on whatever the reaction is to those reports. So let's go ahead and take a look at what happened today. And we'll start at the very beginning. We might as well start with the US dollar. We're already on it. So the US dollar chopped sideways. So what does that mean, and what does that look like going forward? Well, right for now, it's looking like we are going to continue to chop sideways, but given the PPI report, there is a potential for us to pick a direction after the PPI report. It did not happen after the CPI report, so normally we would expect the CPI report to be the more important one. So if we didn't get a direction off the CPI, it's not that likely that we're going to get a direction off of the PPI, but it is still possible. It is still a market moving event, no matter what market we're looking at, whether it's currencies, bonds, or equities. Now, what does that mean? So a way to think about it is, for example, Bank of Japan. Bank of Japan is talking about increasing its interest rates. Increasing its interest rates means that a investment in that country's bonds becomes more attractive, at least the new bonds. The old bonds will go down, but the new issuances will go up, or they'll become more valuable. So more interest will flow and more demand will flow into those bonds. In order to buy those bonds, we have to purchase Japanese yen. So we've got to exchange whatever currencies we have for the Japanese yen in order to buy their now more lucrative bonds. That means the yen would get bid up and the price relative to other currencies would go up. So if we're saying that we have higher interest rates, higher for longer, then we would expect this to go up. The reason why we started moving down in the US dollar is because we've been talking about rate cuts, and we've been anticipating rate cuts. All of this sudden, we got rationality back into the markets when we're looking at the Fed Watch tool right here. And it's looking like we're going to delay those rate cuts. So when the market finally woke up to the fact that we are going to delay rate cuts and not cut immediately, we finally started to chop sideways instead of bleeding downwards. So if it looks like our rate cuts are more imminent, then we could start to move downwards. And if we look like that, hey, rate cuts aren't going to come anytime soon, then we'll either chop sideways or move upwards. What would that mean? Well, if it looks like there's a whole bunch of inflation still, then we're not going to cut rates. If it looks like inflation is way down and we're going to cut rates imminently, then this would come down. So depending on how that PPI report comes, if it's right in line in consensus, we'll probably chop sideways. If it shows that inflation is dropping, then we have the potential of moving down. And if it says that inflation is increasing, well, that might just drive us upwards. So this will be kind of dependent on the PPI report. So after that, we're going to look at our bonds. We already spoke about the value of bonds. So if we are going to cut rates, then the current bonds are going to be more valuable than the new issuance bonds. So this would move upwards. If we are going to maintain the status quo or increase the interest rate, which is not on the table currently, but going flat certainly is, then this will just sideways or bleed downwards. Right now, this movement upwards was a little bit over enthusiastic, so we are expecting this to move down. We did break below that MA200, which is a important psychological point for the bond market, and that means that we're likely going to drift lower. So we should consider a put in TLT. Maybe we'll take a look at that at the end of this recording. When we take a look at the S&P 500, we really just chopped sideways today, down 0.6 or 0.16%. Not really all that much. It's just sideways, and that's really what we were expecting. This morning, when we looked at the market, we said, hey, we had a fairly large range of movement. We had quite a bit of volatility yesterday, and we bounced off of the EMA. Technically, we traded down and bounced off of the EMA 20. But we made it well above the EMA 8. That's a big movement for a single day. And normally we get a pause after a large movement in a single day. Another reason for us to pause is because we don't want to make, or institutions don't want to make big moves or big decisions immediately before an important report comes out. And we're waiting on the PPI. So we didn't feel like this would move all that much. And that's exactly what happened today. We didn't really move all that much. Let's see exactly what range it traded in, because we did give definite ranges to look out for during the pre-market session. And we said that, hey, if we reach 518, we're probably not going to reach above 518, and we're probably not going to go below 514. So you can see that we chopped really around this 516 level for most of the day. We did react to 516 a few times. More than a few times, actually. We stayed under for a little while. We stayed above for a little bit. Then we came up and bounced down off of it hard into the last half hour of the day, all the way down to that 514.72, the line that we drew right here. And then it bounced back up to the VWAP. Not quite to the VWAP by the time it closed. It hit the VWAP after market. So it did recover a lot of that, ending up relatively flat, just down 0.16%. We'll see. I'm sure QQQ and Dow Jones were somewhat similar. So QQQ is down a little bit from the open and down from the close. So we did get a directional movement in the QQQ. We traded down and then stayed mostly sideways again before drifting upward and then following that same pattern as the QQQ. Dow Jones, we traded up and then back down, becoming relatively flat or maybe slightly down on the day. But initially, money moved into the more safe blue chips before dumping back down. So it looks like everything just went flat. We got attention in the Dow Jones, and we lost interest in the tech in the QQQ. And then at the end of the day, that sort of flipped around. So let's take a more careful look on a daily basis at the QQQ, and really just chopping sideways, trading back down to the EMA 8, which is not a big deal at all, but this is really starting to look very flat. You can see that trading inside that rectangle right there, it is getting very, very flat. So we are starting to see consolidation in the QQQ, just like we're seeing consolidation in Dow Jones, which is not what we were seeing in the SPY. The SPY is still sloping upwards. We drew this box right here, but inside this box, you can see that it's mostly been following the EMA 8, and that EMA 8 is slicing upwards through that box, almost creating a perfect diagonal from the bottom left corner to the top right corner. And that's not at all what it looks like in the QQQ. You can see that we're really just trading at a flat line across this box on the QQQ. And in the Dow Jones, we did not draw a box, but same thing here, really. We've been in that range for a lot longer. I should actually pull this even further back to over here. Okay, so we've been chopping sideways for the most part, and this has been a little bit directional at the beginning, but since we hit this region right here, let me drag it back over, we've been going flat, and we are towards the top of that box. But again, this is very, or I could just move that down and say, hey, we've just been filling this box right here. we've been in a very limited range. So we are starting to see consolidation in the Dow Jones. We are seeing consolidation in the QQQ. And earlier this morning, we were talking about how, given the location of this consolidation, it is now becoming more likely that we break down out of this consolidation than we break up out of the consolidation. So we're going to want to watch the Dow Jones very carefully and the QQQ very carefully, especially since we are getting to that squeeze point for the QQQ. You can see that over the last week or two, we've come very close to this trend line a few times, and the last 3 sessions, our lows have actually touched or gone below that trend line. So this is becoming much more dangerous in the QQQ, and there is potential for us to break below that trend line now. So unless we see a clean bounce off of that PPI report, there's not going to be a lot more stimuli left to drive us upwards. And if there's no stimuli to drive us upwards, there's no news to drive us upwards, given all the other market forces in play right now, that is going to make it a lot more likely that we come down through this uptrend. And that could potentially be the beginning of a new downtrend. But of course, we would have to break below it and then perhaps bounce back and retest it and then come back down. But what we're really looking for is a lower low and a lower high. A lower low would be if we find a low below this level, roughly the 423 level, and then 422, 423, and then if we found a lower low, then we're looking for a lower high. So when we bounce back up, we don't quite make it up to this consolidation region. When it bounces back up, then that would be definite confirmation of a downward trend, because then we would be making a series of lower lows and lower highs. But we're a little bit far away from that right now. We're just saying that if and when we get that change of trend, that's how it's going to look. So we see the potential for it. We're testing this lower line right here, this uptrend line, and we're every single day in the last 3 days, we've touched it. So we are testing it, and it's becoming more and more likely that we break through it rather than we move upwards and make another new high. So QQQ is definitely something to look very carefully at. IWM, we're going to watch that very carefully too. We did get a green bar off of this red pink line level right here, but it's not a definitive. This is by no means a confirmation bar. It is a green bar, that's a positive, but it's not a green confirmation bar. So tomorrow we'll want to see a confirmation bar at the very least for us to get comfortable that we might bounce off of this. Otherwise, we're just moving across this line, or we move back down into the region between these 3 pink lines. So tomorrow morning, given that right now we have no idea how the report is going to play out, we'll probably have a very muted futures market. Yeah, flat, very, very, very flat. A little bit of direction in the NASDAQ, but not much, not even, nothing, not significant whatsoever. So really, we're going to wait and see what happens on that report. What we want to look for is the reaction in the major indices. So presumably, we will chop somewhere around here throughout the night and into the morning session. If we stay at this level, then we'll be at roughly this 516.72, 516.5 level. If we drift lower, that's fine. We'll just index off of where we are at 5:30 in the morning. And then we want to see that sharp move. There will be movement. There will be a sharp movement, just like in the pre-market when we released, we got this huge movement or huge volatility. You can see how muted it was right here, tiny, tiny little bars. Now we get huge bars, huge direction after that report. So we can expect much the same. The question that we can't answer right now is it going to be to the upside or to the downside? Does it stay down? Does it stay up? Or does it do this bounce thing like it did 2 days ago with the CPI report? So we really want to see how that behaves and then which direction the momentum is moving at the open. Unless there is a huge miss or a huge, I guess, a miss either direction, either under or over, we will not expect a huge movement off of that report. However, if we are in line with reports or there's any suspicion that that the report gives the Fed reason to start cutting rates or start cutting rates earlier than June, then this market will fly upwards. If that's not the case, then we are looking at this 518 level as very important. It's been unable to breach that level in the last 3 days. So this is a very important level. If we can get above that, comfortably above it, and then come back and retest and survive that retest, then we are headed towards the 520 level and through to another all-time high. Not necessarily today, but sometime soon. If not, when we break down, then we're really going to want to watch the 512 and 508 level, then this 505. And if we break, each one of these is increasingly important. If we were able to break 505, that'd be quite a drop in a single day, but it is not out of the realm of question. Then that would be obviously very, very bearish. But we just want to see how strong these levels of support are if we are going to move to the downside. Given the reaction to the CPI report, I'm not really expecting us to move downwards. The CPI report was inflationary. And inflationary should mean that, hey, we're pausing rates for even longer. And that should have been a downward force in the markets. And initially it was, but we recovered quite a bit, quite easily from it. Where's Tuesday? Yeah, this one's Tuesday. So initially it was, we traded down and we traded below this 512 level. But afterwards, the market just caught a bit and started going up and going up and going up. It didn't care about the CPI report beyond a couple of hours. So if we don't care about the CPI report that much, then we're probably not going to care about the PPI report that much, because generally the CPI report gets a lot more emphasis than the PPI. Both are very strong and very important reports, but generally the CPI report is held with more weight. So the natural direction, barring any news that makes it very clear that the Fed is going to pause rates for longer, then the natural inclination at the moment is for the market to drift upwards. Why? Because that's what happened after a CPI report, but also because we are still in the uptrend and we did break out of this box and we could very easily continue to drift upwards. That's not necessarily true for the NASDAQ or the Dow Jones, but it is true for the S&P 500. So that's what we want to look out for. How do we react to that report? Do we wave up, then come down, wave down, then come up? Do we have strong momentum and just go up or just go down? And as we open, how far off the consensus are we? If we are extremely off the consensus, then whatever direction that we're off by, it will indicate the direction that we move, and there will be a strong move in the index prices because of it. However, if we're just right near consensus or right on top of consensus, then we may see volatility and direction initially, but eventually we would expect that it would still play out to the upside, very similar to Tuesday. So that's everything to look out for going into tomorrow. I apologize I knew I was going to have to miss this afternoon. I had no idea that I'd still be working on things at 10:30 at night and looking like that I might not finish until well after midnight. So I am not planning to show up to the pre-market session live for March 14th. This video is recorded in anticipation that I most likely won't make it, because even if I wake up on time and here and ready and available for you and look at the markets with you guys, there's no guarantee that I'll be clear-headed enough to ensure that I'll give you a quality analysis, or clear-headed enough that I won't make any weird mistakes. So have a wonderful night, have a wonderful morning, have a wonderful trading session tomorrow. And assuming all goes well, I will be here for the afternoon session live on March